Well, let's talk now to Daniela Hathorn, who's Senior Market Analyst at online trading platform Capital.com. Good to see you, Daniela. Thank you for joining us. So as we're hearing, there's some certainty emerging around US tariffs, plenty more to nail down, of course. But how is all this affecting the markets globally?
Thank you for having me. Yeah, it's interesting because we are seeing a little bit of uncertainty priced into the market, but we have come a long way from where we were back in April. Now, we have to remember that tariffs have been pushed back several times, or at least the grace period with negotiations, and that helped markets regain a lot of confidence. We've seen specifically US equity markets push to new all-time highs for several weeks now. We have come to a little bit of an inflection point now where we are at a time where markets are a little bit overbought and there's maybe a lack of potential to move higher given the current conditions. And of course, the latest data, the jobs data on Friday, did precipitate a little bit of reversal in markets. But already yesterday and today throughout the European session, we have seen US stocks once again find some strength to move higher. So we do have some resilience in the stock market. And I do think a lot of this is coming from several factors. One being the earnings season, which has remained pretty robust, specifically in some sectors of the economy, but also now expectation that the Fed is going to lower rates as soon as September. And that, of course, is positive for the stock market.
Well, you mentioned earnings season. Let's talk about that. Which companies are moving the markets today?
Interestingly, we have one which many investors might not have thought about before, or let's say in the last few months, but Open Door is actually reporting earnings this afternoon, so after the close in the US. And it's been one of the key drivers of the latest meme stock frenzy. So it's going to be interesting to see how markets respond to this, how they respond to actual hard data, because a lot of the move has been once again brought on by online chatter and speculation about the stock being undervalued and how much potential it has. Whereas realistically, the data has shown disappointing earnings and declines in the last 2 years and the start of 2025. So now is the time to show and to prove whether there's actually a turnaround in the stock. And I think investors are actually going to place quite a lot of interest on this earnings announcement because of the volatility we've seen on some of these meme stocks in the last few weeks.
I wanted to ask you about Chinese stocks. We heard earlier in the programme some strong service numbers. How positive a sign is that, do you think?
I think it's definitely a sign, it's definitely a step in the right direction. I think we've seen a lot of concerns in the last 24 months, let's say, about China being one of the powerhouses of consumer demand. So the PMI data coming in better than expected is obviously good for sentiment. And we have seen some robust figures from China in the last few weeks. We have seen that GDP data coming in strong and also some manufacturing data as well. But there are some pockets of concern still, one of them being consumer demand, retail sales actually underperforming in June. We also have deflationary pressures, and we have also monetary policy from the central bank to watch out for. So definitely some positivity coming out there, but also trade tensions continue. We do have that August 12th deadline between the US and China. What's going to happen? We don't really have any clear indication that things are progressing accordingly, and therefore we are potentially in for a little bit of a shock if the tariffs that were announced in April do actually come into effect.
Daniela, great to talk to you. Thanks for coming on the programme. That's Daniela Hathorn from Capital.com.